I'm gonna go ahead and start the recording and hand you over. Hey, Jamie, Steve, what's up?
Hello, Scott. Hey, Steve. How's it going over there?
Oh, happy Monday.
Yes, happy Monday. It is a happy Monday. Well, it was definitely a Monday, that's for sure. And, everybody can see the date here. It's August 26th. So the next time we all convene for office hours, it will be, I believe, September 2nd. September will officially be here. We'll be done with the summer months. I have to think that that is a good sign. I think, well, this has not been a summer of ordinary proportions. So, without me bantering too much about what might be coming down the pipeline as far as the market goes, let's go ahead and get on with the disclaimer here before we get to the good stuff. Just want to make everyone in attendance aware of the fact that we share information with you in these webinars for educational purposes only. Please don't misconstrue what we share with you as a solicitation to buy or sell stocks, bonds, equities, or anything for that matter. If you do need investment advice, please seek out a registered investment advisor or a Series 7 licensed stockbroker, someone that can legally dispense investment advice to you. Okay, moving right along here. For the new people that might be attending for the first time, or if you're not familiar with Trade Ideas as a whole, other than our technology, we'd like to share the fact that we've created quite the community around the technology. It just makes things easier for everybody. Number one, the trading room, or the traders room, we should say, hosted by Mr. Barry Anderson, is a big hit in many capacities. Number one, it's free of charge. You don't even have to be a TI subscriber as of yet to get in there and see what the room is all about. So other than Barry moderating being the best thing about the room, the price of $0.00 is great. If you've shopped around the web for trading rooms that might be conducive to your style, you know that any of them worth their salt aren't free, all right? But ours is. Any given day, somewhere between 400 and 600 people in there. Got the whole gambit, experienced traders, brand new people, and everything in between. So Barry does a great job at showcasing his trading style, showing everybody how he uses TI technology. So it's a great place. If you haven't been taking advantage of that resource, by all means, get in there and do so. Of course, you get myself and Steve today for office hours. As far as the 5 p.m. Eastern webinars go, Monday through Thursday. Then Tuesday rolls around, Steve's going to take the steering wheel for the trade of the week. Andy Linloff will ride shotgun with him. And then we switch it up a little bit come hump day. Wednesdays, we got the Q&A demo with the CEO and founder, Dan Merkin, along with our Chief Technical Officer, Brad Williams. Andy's going to round out the 5 p.m. Eastern webinars with the Trading Studio on Thursdays, and I ride shotgun with him. Friday rolls around, we like to change it up even a bit more. We've got the Friday support session starting at 11 a.m. Eastern and going anywhere between 2 and 3 hours, depending on the crowd. The cool thing about the Friday support webinar is nothing is off topic. Could be something very simple, could be something very complex, AI, Brokerage Plus, all that good stuff. So nothing is off the table for the Friday support session. So a great place to get any question TI related answered. In addition to the 5 p.m. Eastern webinars, we've got the TI University series beginning at 12 p.m. Eastern, Monday through Thursday. 101s on Monday, 201 Tuesday, 301 Wednesday, and 401s on Thursday, all beginning at 12 p.m. Eastern. So this is a great place, especially if you're a beginner, to get over that learning curve quicker than later. We do recommend that you take these in order because what you learn in 101, you'll need to build on 201, so forth and so on. The content with the TI University remains static. In other words, it's always the same old stuff with 101, same stuff with 201, designed that way for a purpose. So if you can't attend the live versions, which is the recommended way because you can get your questions answered live as well in each one of those sessions, fear not, we have all of these recorded on our Trade Ideas YouTube channel. So if you can't attend them live, the next best thing is just going and watching the pre-recorded versions because the content is static. So take advantage of the TI University. Good stuff, good content, get you over that learning curve quicker. Moving right along here, we always like to just point out how our subscriber base has grown since the introduction of our AI modules. The first one being introduced in the very beginning of 2016, and then since that point in time, we've added a couple of additional modules, Holly 2.0 and Holly Neo. And as you can see, over the past couple of years, user base keeps expanding. So it'll be interesting to see what our 2019 bar looks like once this year is done, which isn't too far around the corner. In addition to the AI, we've launched our Brokerage Plus module, which allows you to connect our software to your trading platform if you use Interactive Brokers. This basically connects to the Trader Workstation at Interactive Brokers and allows you to trade using our platform as opposed to just executing through the Trader Workstation there. In addition to being able to trade manual, point and click variety, we've made it a lot easier with big buy and sell buttons, reverse buttons, flatten buttons, get me out of half buttons. So it's just a more intuitive interface, but it also allows you to auto trade strategies that you've developed or automate the AI signals as well. So as you can see from the chart here, live orders are in blue, demo orders are in orange, and they just keep increasing each and every month. So we've been posting some good numbers through the summer. It's going to be very interesting to see what happens to those numbers come the fall. I think they're going to do nothing but go up. But what does this tell us? This tells us that people like it. People are actually using it, so that's good. So if you've got an IB account and you haven't tried Brokerage Plus, highly recommend doing that. All right, here we are, today's itinerary, or what we're going to talk about today. So in keeping with tradition, Steve, if you're ready to talk about the broader indexes and all that good stuff, and I'll kick it over to you here. 1 second.
Let's
there
see
we
how
go.
far I can get. All right. So there's a great question in there, which Jamie already answered from Brian, wanting to know what are our thoughts on this constant gapping to the start of each day for the last couple of weeks. Well, if we look here at the S&P SPY, we've got a tale of two markets. You know, if anybody over 45 probably remembers that old game called Chutes and Ladders when you were a kid. You'd try and climb this little board, and then you'd be giant red chutes, and you'd climb the green ladders. Well, that's what we find ourselves in, and it's often the case when the market goes into volatility mode, and that's what we're in right now. We're in full-on volatility mode. We are in a news-driven market. We are in a Twitter-driven market. Primarily, of course, doing with, you know, the intense trade negotiations back and forth coming on. And when the market has uncertainty, we start to get wild fluctuations and wild volatility, which means a few things. If you're trading the environment like this, you want to probably cut your size in half just to try and, you know, compensate for the big wave surfing here. Otherwise, be very careful holding overnight. I mean, we had a gap up last night. If you were, you know, on Twitter, people were just saying, "Oh my God, this is the end." Where market was down pretty good last night, you know, on in the futures. And then what happens? We gap right back open for maybe a tweet or two. Who knows? We could gap right back down again tomorrow. So we don't really know what's going to happen. This is the volatile environment of a market being closed from not being able to trade bell to bell, or 24/7 is what I mean to say. So that risk is still inherently there. The other observation is I was singing the same old tune back here, saying there was no bear case to be made. Well, I can't say that anymore. There's a lot of bear cases to be made here. You know, first and foremost, the S&P just can't seem to get back above its 50-day moving average. It seems to be underneath and under pressure. And now the 50 has been crossed by the 20, which is a faster moving average, which now seems to have held the price action, at least for yesterday and even under today. So the first thing that needs to happen for the bulls to regain control of this market would be to put a closing candle here above this declining 20-day moving average, and then figure out how to battle this major pivot line we talked a lot about in the past, which is just right above this flattening 50-day moving average. So yeah, we had a gap up and a bit of a bounce, but there is tremendous work to be done right in this area. A lot of supply, a lot of resistance, moving averages, there's a ton going on. And so until that happens, you know, this is the area of interest down here. And what we don't want to start to see is like when you drop a ball down off a wall onto the street, it starts to have lower and lower amplitude of bounce before it makes its move. So there's a lot of bear cases to be made right now, guys. It's nothing like the market that we had, back here. And I think I've been gone for a couple of weeks for the most part. So there's been a lot happening, and you really got to downsize your risk appetite, your share size, and your overnight appetite. So that being said, the trade of the week is in a silver mining stock. The reason I bring that up is because silver and gold really seem to be the only thing that want to move higher right now in this market, which again is very defensive in nature when you look at it in that context. So there was no trade of the week, which I'll talk about tomorrow in terms of the stocks, but the trade of the week was in a gold mining stock, which kind of just did what we're going to call possibly a go, pause, go. Friday was a nice move, and then today we get like a day of rest. Ideally, the bulls want to see the go, pause, go tomorrow. If that doesn't happen, and this little spinning top here gets taken out to the downside, then that trade might be broken. But in all almanacs or all hours of operations that I've watched trading price action, this could be the precursor to what we call a go, pause, go. So that is a quick sidetrack on what's working, meaning the metals, gold and silver. But back to the mess here that is. Not only that, look at not only the volatility, but look at the volume that is associated with the volatility. So we're not messing around here. This is not really your typical August. This is more of a typical August back here, this kind of stuff on low volume. So additionally, this week is traditionally a very slow week. I'll look up at the attendance here. It's about normal for what it's been the last couple weeks. But the week going into Labor Day can be considered very, very anemic and slow. But I don't know if that's going to happen with all that's on the table right now with the geopolitical and the trade news. So, stay tuned for those that are here and watching. There could be more fireworks. So as we go over to the NASDAQ and take a look at what's happening there, still kind of the same issue I see. I see a real problem, many, many days stuck here below that 50-day moving average. So at NASDAQ as well, cannot get below its 50. And this is an interesting one coming up here, the Dow. The Dow is showing us a very interesting support. So what I'm going to say is if we start to lose control of this market, what the bulls do not want to see is a closing candle below this 200-day moving average. We haven't seen that. We've seen a couple of days where it pierced below and intraday price action pops back up, except for this little head fake back here. A lot of bottoming wicks. So this is a very defensive area. This area is being defended greatly by the buyers. And if we lose this bottoming wicks at these areas, the 200-day moving average, and we have a really ugly close at some point this week, that's going to be a big warning sign. Let's draw a siren here. That would be a big warning sign. We don't want to see that. That's kind of what I'm watching for here. The Dow closes below that 200-day. It's about as old school as you get. The Dow Jones Industrial Average closed under the 200-day moving average today. That's the kind of stuff they say in the nightly news, and also hedge funds and the smart people will pay attention to that. Lastly, the ever so weak bringing up the rear Russell 2000, which only looks at small cap stocks, is continuing to show its weakness. It never really was able to resolve these issues back up here in the past, and subsequently it's just kind of helping lead the market lower, for lack of a better description here. Let's take a zoom out. We've got this red line. It's a pretty significant line. It's going back to this low here, and we tested these lows back here. So again, if the IWM decides to break below this red line here as well, that also is not going to be good. But for me, I'm really watching that Dow. I think that's going to be really interesting. If the Dow cannot hold this flat 200-day moving average, the next day could be bad unless we get some sort of stick save Twitter news or something like that. So gold and gold miners is where the strength is for now. You can see the money going into the treasuries as well. Good strong trend over there, but we still have 4 days left in this week, and let's see where we resolve. But I'll be watching this declining 20-day moving average. We're going to need to get a close back above this level, and we're going to need to get a close back above this level for the bulls to get back in charge, because otherwise they're not in charge, in my opinion, right now. So that's really all I've got, Jamie.
Good enough, Steve. Let me grab it back from you. And thank you for that. Yeah, nice little inside digestion day for today. You can see my screen again now, I take it. Okay, perfect. Thank you, Waleed. All right. Okay, ladies and gentlemen, so in keeping with tradition, what were my compare count windows telling me, or my compare count window, my main one that I like to watch, take a peek at after the first 15 minutes today, and I will show you. Okay, so this is what we had after the first 15 minutes today, 53% bearish count. And, you know, typically if we come in with a bias less than 55%, doesn't matter, could have been to the upside, but today it just happened to be to the downside. What does that tell me? You know, if the count, if the bias isn't above 55%, to me, what that typically means is, you know what, anything's game. Anything is fair game. There's going to be some shorts, there's going to be some longs, but what it typically tells me, the main message is there's not going to be a whole lot of follow through. And boy, that was the motif today. Had some good moves, but if you didn't take the money, it didn't stick around for very long. And when we start looking at some of these trades, it's going to be that exact type of action. All right. So, and of course, coming off of a day like we had on Friday, if I just expand my SPY daily back out here, I mean, look at what we had and look how inside we are. I mean, you don't have to look very hard to see that that's an inside day. You know, a couple of these back here, you really have to kind of squint and go, yeah, that was an inside day. You know, I think there was another one around here somewhere. Anyway, this one, but boy, this one just sticks out like a sore thumb. So we'll have to see what happens tomorrow. But getting back to what I said here, anything's fair game. When we look at what the market did on the 15-minute, what we have, you know, right off the bat, we had a little push down the lows. Guess what? Push back up to higher highs. Then what we do? We had another little peel off, getting below that 10-period SMA, back down again on a nice down move before the day finishes, back up to push new highs again. You know, let's see, who was asking that question earlier about the gaps? Okay, yeah, so Brian, you know, these big pushes at the end of the day, hard to say, you know, what causes them. You know, if you follow anybody on Twitter, you know, there's a guy who's made his whole Twitter persona about the last 30-minute push in the markets, ramp capital. So those have been around for a while now. This crazy action that we've had as of late, as Steve was talking about, it's news driven, it's tweet driven, it's China trade war driven, it's the Fed lowering interest rates driven. So we've got a lot of different things coming in to affect the markets as of late. And, you know, even though the charts guide us, boy, those news events can just be completely random, and it seems that that's what's been happening as of late. So will the insanity, for lack of a better term, continue into the fall? Maybe, maybe not. We'll just have to wait and see. And by the way, I misspoke a little earlier. I was saying that the first office hours webinar would be on the 2nd, and thank you, Liz. I slipped my mind, but that's going to be Labor Day. The market's going to be closed next Monday, so we won't see you guys back in here for office hours until the 9th. So just mark that on your calendars. Labor Day, next Monday, the market will not be open. Okay, so going with the theory here, seeing a bias of less than 55% one way or the other just means it's going to be a slippery slope. We're going to have downside action, we're going to have upside action. So let's take a peek here. Short-lived moves is the theme. So how did Holly do today? Well, Holly made quite a few trades, 26 to be exact. If we focus on the channel bar up here, 12, 18, and 26 cumulatively. And even though Holly was in the green, not that big of a day on that many trades. You know, if we just say that this is almost a point, and that's a point, up slightly less than 2 points. So these numbers are reflective of 100 share trades. So we'd be close to 200 bucks, but not quite if you're doing 100 share trades of each trade. Now keep in mind that does not take into account slippage and commission. So if you were taking every Holly trade today, or if you were automating, you probably, I'd guess, be around flat after commissions and slippage. Just FYI. So let's take a peek at the risk on, risk off spreads that Holly did have today, even though there are a few of them not very juicy on the spread side. All right, and what I've done here is I've got my AI all trades blotter, meaning we're seeing all the trades from all the separate modules here. If I just stretch this down a little bit, there we go, we can see everything. And if I right click here and go to segments, you can see I'm on all. You know, we do have the ability, if you want to segment But if you want to see all the AI action, it's better just to have it on all trades. So I've sorted by risk on here, and right off the bat here, Cyrex. Now, before we talk about this actual trade, I just want to back up my daily here and go, wow, Holly really loves to trade Cyrex. I mean, this is all the way back to 2017. She was really all over this thing back in this run. And this run went a little quiet, but now here come the signals again, whereas these were all buys, starting to get a little toppy up here. So Cyrex today was a short sell. And here we are looking at the 15-minute candles. So what do we have in risk off? A 6-cent loser versus if we would have stayed in the position into the close, be up 39 cents, maybe even a little bit better at the bottom here before this wick kind of retracted here going into the close. But classic reduced risk pattern right here, because as soon as Holly signals it, we get in right here around the 22.16 area. Immediately just kind of grinds against us for, let's see here, not including the entry bar, 1, 2, 3, 4. So for about an hour after this position is entered, we just get sideways movement, all right? Now notice the reason that Holly got out of the trade, reduced risk mode, because this is classic. If we go sideways and we're slightly out of the money for X period of time, that's when Holly can call one of her audibles. Reduced risk is one, profit save is the other one. Those are the two audibles that she can call. The other three exit reasons are static, so to speak: profit target, stop loss, and timed hold. But the longer she stays in a trade and it's slightly out of the money or doing the little flat line dance here, the more likely she is to implement reduced risk or profit save, and that's what she did here. So a little sideways action, not getting quite up to our stop loss here, but out of the money nonetheless. But the bottom line is this is not necessarily a bad thing, whether it's a short or a long trade. It's just going sideways for a little bit, all right? Buyers and sellers have become equal. She calls it right here, takes her 6-cent loser. But the more we see this, the more we can say, hey, you know what? Didn't even get up to the stop, got about halfway there. We got a nice little area of resistance right here on the intraday chart. So I tell you what, Holly, I see you're getting out. I'm going to stick with the trade, stick with my hard stop here. And about 45 minutes later, we started getting some payola. Not a huge move down here, and then we're really hugging the line here. So this thing didn't release until the end of the day, but a release is a release. So we got a nice, let's see here. Well, that's a -6. It's not 6, so it's not 33. So that's actually a 45-cent spread between -6 and 39 here. So some decent risk on opportunity, even though you had to be very patient with this one. Risk on spread is risk on spread. So the biggest one that we have today is this guy right here with 45 cents. And of course, that was a short sell. Wind, and we do have several of these. It's just the amounts aren't so big, but it's the pattern that we're focused on here, not necessarily the numerical amount. Lord knows we've seen much bigger ones, and probably much bigger ones coming down the pipeline once we get the summer behind us and get into the September month. So -3 on this one versus 27 cents. So this is technically a 30-cent spread between risk off and risk on. Profit save, the exact opposite of what we were talking about on the short and the reduced risk. So not a bad entry signal right here. We got 30 minutes of selling. Holly jumps in here on support. If we kind of backed out the daily right here, we could see what she was seeing, folding into this little area right here. 30 minutes of, or a good 30 minutes of selling, almost 45 minutes actually. But anyway, a nice entry signal towards the low. What do we get? We got the same type of action. Now the shaded area right here, she didn't give this one very much time at all. If we just kind of crunch this down into 5 minutes, probably be a little bit more obvious here. So we get the buy signal right here, and this looks just like the opposite of the CYRX. We get about halfway down to the stop loss area right here. But halfway down does not implement a stop. Still had plenty of room in there. We get sideways action, slightly down against the entry line, and Holly gets impatient once again, cashes it out for a 3-cent loser, whereas all we had to do was stick to our hard stop here and go, you know what, Holly? I see that you're exiting the trade. I'm going to take a little bit more risk. I'm simply going to stay in it. I'm going to stick to my hard stop, and voila. On this one, you didn't have to wait for the end of the day. Now here at the close, we were up 27 cents. So in this area up here, we were probably up a little bit more. This max profit, it reflects how much she was up in risk off mode. But once we get out of here, we're into risk on mode. So a nice little spread of 30 cents in there on the WYND as well. Just had to ignore Holly's exit, stick to a hard stop, and we could have stayed in this one for a little bit longer and been rewarded for it. Now you can see right here, PetQ, 53 cents, and if we stayed in it, we would have lost money. Now, not a bad trade here, and where did let's see, risk off percentage, not the biggest winner here, but a good trade in risk off mode nonetheless. Now, Fund C, you know, I almost don't even want to bother with this one because I'm sure somebody might have traded this one out there, but I mean, look at it. When I see charts with dashes, I typically just go, no thank you, whether it's a Holly trade or, you know, something that I found on my own. Now, what I'm looking for here is my risk on or my risk off percentage, because I did want to take the time. That's risk on, risk off. Okay, LIQT, all right. Wanted to point this one out because it just happened to be the biggest winner of the day in risk off mode. You know, even on a day like today, you never know what's going to come down the pipeline, and there's usually one a session. LIQT happened to be the one today. Just a beautiful entry right here around the 667 level, and she pegged this one pretty darn good up here. Got out, let's see here, LIQT 859, so right in that 10 o'clock bar right there. All right, beautifully played, beautifully played. Now, if we would have stayed in this one, we'd be making less, but we'd still be making money, but a nice 5.7% gain in LIQT today. Smaller dollar stock. So in some of the good characteristics, which relative volume on the high side was kind of hard to find these days. I mean, plenty of stocks doing slightly above 1, but not a lot of them doing, you know, the high 2s, 3s, 4s, and higher. But LIQT today finished the day at 3.64. Usually only kicks out a couple 100,000 shares a day. Almost finished the day at 700,000. So nice volume play, nice low floater in LIQT today. If you're wondering, well, what does a low float mean? Well, focus on this metric right here. We can see the float, 17.79 million shares in the publicly traded float. Typically, what we consider low float is anything right at the 20 million mark or lower. That's what we consider low float stocks. And when the volume and the buying or the selling comes into the low floaters, they're going to move a lot more than a stock with 100 million, 200, 500 million shares in the float. So LIQT, the big winner in risk off today, if you would have held this thing into the close, still be up a handsome 2.85%, but 5.7 on the intraday. And keep in mind, this is keeping in league with what I was talking about earlier, all right? Short-lived moves, you better take it while it's there because it ain't gonna be there for long. Classic case in LIQT today, and the biggest percentage gainer. Even it backed off after a while and just kind of, see if I pop this back over to 15 minutes. Do we stay above that fast line here? Yep, and we just rode the fast line all the way into the close here. Let's see if there's any other risk on to even talk about today. That was the thinly traded one. Just don't see a whole lot of other stuff on here. You know, we've got some 16-cent spreads here in 10B. Another decent one in Fizz, 5 versus 16. So while it's not a huge monetary difference here, I mean, look, 5 cents versus 16, that's 3 times better, right? But it was tricky today, you know, because once you got up, if you didn't take the money, a lot of times you go back to zero and you never got that second pop back up to profitability. And the next thing you know, not only are you not, you know, not in the position to take a profit, but you'd be in a red position. So all in all, Holly pretty much treading water today, and on a day, the day after, a day like Friday, not a big surprise, you know. It was fleeting today, the alpha that Holly could target. So once again, even though we're up considerably over here after commissions and slippage, probably be close to flat, if maybe up just a smidge after all your fees and whatnot. All right, just checking out the question here from David. Do you know Ed Downs Fulgent Technologies? Can't say that I do, David. Can't say that I do. All right, so now on to a different Holly topic, which has been very, very interesting, and one could even say profitable since we started tracking this. And what I'm about to talk about is following the prior Holly signals, okay? And let me clarify prior here for me. For me, prior Holly signals are anything that occurred over the past 2 trading days. So today, I was watching all of the signals that Holly generated on Friday and Thursday that finished flat or in the money in risk on mode, okay? And then what I do is I put those in a list and point them to my 2 specialized tickers here, and then watch those tickers. In this case, these 2 guys right here, as you can see right here, Holly Longs and Holly Shorts, and they're both pointed to their respective lists. So if we go take a peek in here, look at the symbol list, you see I have Holly Longs over here. If we go take a peek at this one, oops, how that happened, I do not know. We're going to see that this list is pointed to the Holly Shorts. Now, if we take a peek at the list tools, symbol list, my Holly Longs today, I had 10 symbols, and the Holly Shorts, I had 4. And that's because over Friday and Thursday, there were only 14 positions, 4 shorts and 10 longs, that finished flat or better. All right, so that's what I did, is I only watched those and focused on the plays that were coming through here. Now, being a human and seeing these compare count readings today, I'm thinking to myself, well, I'm not just going to jump in on the open. And by the way, what I found to be most conducive for what I like to do is not jumping in on these on the first 1 minute, 2 minutes. I found that waiting about 10 minutes from doing a lot of back testing on single days, waiting 10 minutes is kind of like what I like to do here. Everybody's a little bit different, but 10 minutes seems like the sweet spot for me. So what I'm going to do here is I'm just going to go over the process on how I extracted these symbols and then talk about how these things did today. So number 1, you know, if I just pull up my calendar here and we look, okay, Thursday and Friday, the last 2 trading days, if we wanted to extract those symbols, we would simply go to the history feature and go to time frame. And you can see from earlier this morning, I've already got it set, the 23rd and the 22nd. So when we click OK, now we're seeing all the trades. If you check out the dates here, you're not going to see anything other than the 22nd and the 23rd. So then all we have to do is sort by risk on, go down to here. That guy was up 3 cents. The next guy down was 8. So anything with a 0 value or higher is what I'm keeping here. So these are all the symbols, respectively, that I put into my short and my long list today. Now, when they're all choppy like this, and you got shorts in between the longs, you know, there's not that many stocks here, what I say, about 14. So I just go through and I manually insert the symbols. On some days where we just have a whole list of longs, you know, let's say, pretend for a moment these are all longs, you can just as easily drag your mouse down and hit Control-C, and you can copy all these symbols when it's conducive. But when you get a lot of spots like this, it's probably faster if you just go in there and manually type them in. But that's how you go back and extract the prior symbols, sort by risk on, and then just start with the 0 values and higher, and input these into your respective short and long list. I'm just going to pop this back into real time and move right along here about how these guys performed today. And I'm still kind of amazed, and you know, I'm still getting used to this myself, because when I see the compare count numbers with a little bit of downside action, even though it's not above 55%, you know, human nature makes you think, okay, well, I'm going to be a little bit, maybe I should focus on the shorts or the longs, but the bottom line today, it just didn't matter, all right? The longs presented some good opportunities, and, you know, keeping with what I was saying earlier, if you didn't take it, they kind of pulled back. But what we're going to do here is put this window on today's history. I believe I'm already there. And we're just going to scroll down here, and I believe I'm already there. So we can see right here, here's the open, 8:30 my time, DPW, PTGX, but remember, not hitting things on the open, all right? Matter of fact, let's just put this back on 5-minute candles since we're looking at things pretty close to the open. So, you know, if we would have jumped in on DPW on the open, you know, we would have got it right here. We would have had this hit this little downturn here. But what did I say? I'm waiting 10 minutes before I even consider hitting any of these. So the first one after 8:40 was PTGX right here, okay? And we can see the entry price at the alert, or the alert price, 1306. So I'm going to pop this back into 15 minutes because it takes a little getting used to here. Because these windows right here, if we take a peek at the guts inside, it's just a new high with one filter attached. Position in previous day's range, it's got to be above the high from yesterday, okay? So you can see when this signal came in at 1306 right here, we had just approached yesterday's high, and you know, you might be thinking the same thing as I was this morning. Well, man, I'm feeling chasey right here, right? I'm buying it up here after this big green bar, but guess what? Just didn't matter. Another 15, 30, 45 minutes of upside movement here. So 1306 topping out, let's see right here, it won't give me my cursor, topping out right about 1349. That is a very good percentage move considering 1% is 13 cents here. We had almost, what, 40 cents in that move right there. So that's a good 3% move from that entry all the way up to here. But remember what we were talking about earlier, take the money while it's there. You know, and of course, we don't expect to top tick everything, but once we see these wicks kicking in, this wick, that wick, and keeping in mind what the count was on the compare counts, that should always ring in the back of your mind if you're watching this compare count window. Less than 55%, might be more of a scalping day versus a hold for a continued move day. So that was the first guy out of the chute right there. PTGX, 42 cents, I believe, was maximum profitability there. So even if you got 30 cents out of this thing, that was a great trade in that one. So next, CE, or excuse me, SE. Now, this one, nothing to write home about. Just in the face of the market conditions that we had today, you know, maybe you flatted this one. I think maximum profitability was only 16 cents in this guy right here. So maybe not quite a 0.5% at the $32 level right up here. Same type of deal. Feeling a little bit chasey, get a little sideways action. You got room up to 32.18. Whether you took it up here or whether you pretty much flatted the trade, which is what we traders sometimes have to do. It's not working. The longer I stay in it, it's our own version of reduced risk, right? Hey, we got a little pop, we're eking back down here. Everybody's got different rules. You know, I really hate letting a profitable trade go negative on me. It depends on how much we were up in the first place. You know, if from this point you only got up 14 cents or 10 cents, you know, you give it a little bit of time here, but a good rule of thumb is, man, you probably don't want to let it go more than what you were up initially. So SE, nothing to write home about. Just wanted to get that one out of the way because it is one of the 4 trades that were produced through this window today. So PTGX was the first one, SE was the second one, and then scrolling right along here, not quite an hour into the open, we got this guy, CDLX. Notice prior day high, as soon as it gets up there and breaches this little level right here, boom, we get an entry signal right there at 33.83. About right here, okay? What do? We get a little sideways action, but then peak out up here, and let's see, 90 cents. You were up 90 cents in this guy at the top right here. So plenty of time to figure out what to do. Take the money, take half, let, you know, and of course, you're seeing a buy signal here. This confused me earlier in the day because I was pivoting off of what I saw come through here. But guess what? Holly called along in this one again today. See right here? CDLX basically flatted the trade in risk off mode. Had you stayed in it, you would have been up 10 cents. So that's why our arrow is over here. All right, the AI kind of overrides everything. It's like, okay, this is where I traded it. But if you're watching Holly Priors, you would have had an entry signal back here, 33.83, and you would have gotten to enjoy profitability up here of almost a buck, about 90 cents to be exact. So not a bad trade whatsoever in CDLX. So far we've had PTGX, which went up 42 cents, SEC, or excuse me, SE, Freudian slip there, only moved 16 cents before it rolled over. CDLX, 90 cents of max profitability. And then lastly, it's always fun when a low dollar one comes through. Yep, first tick on DPW coming through. As it penetrated yesterday, as it penetrated these levels, a nice entry signal right here at 357, and this little guy ran all the way up to 4. Okay, so 43 cents in a 350 stock. That's a huge percentage move. Okay, well over 10%. You know, pushing up there to 15% intraday move from this point right here on DPW. All right, so definitely the winner of the day as far as the Holly Priors go. So what do we have here? We had 42 cents max profitability in PTGX, 16 in SE, 90 in CDLX, and 43 cents on a low dollar DPW. So that is a total of almost 2 points, 1.91 points to be exact, on only 4 signals. Now, what did Holly do today? Up almost 2 points on 26 signals. But yet the Holly Priors on the long side alone, almost 2 points on only 4 signals. Okay, so there is something to this. I'm learning and sharing the information as I find it with you guys. But even on a day like today, where I was just thinking to myself, you know, probably won't have a whole lot of long side opportunity, I was kind of shocked and amazed pleasantly at how well these Holly Priors performed today. You know, almost 2 points on 4 trades versus almost 2 points on 26 trades from Holly Live Signals today. So I would highly advise everybody to start following along and hopefully maybe even hitting some of these trades. Now, those were just to the long side. Short side, we only had 2 signals and they were in the money for a little bit, but just like the longs, if you didn't take them, they didn't stick around long. Actually, let me just go to today here. And before we get started here, I just want to point out one of them was Goose, okay, which was a trade from last Thursday, all right? And then check out what Goose did on Friday. So it was a trade, a prior trade from this day, and then look how it's set up on Friday as a short sell, right? Whether you shorted it on the open, took a little bit of extra risk, or whether you waited for this range break here, whereas if we play by the rules and use that wick, you know, you would have shorted here and still get a pretty nice down move, all right? But that was a prior Holly from Friday, showed up again today, got a short signal here. Let's see, I think that was the very first time, 36.81. So you did have a little 50-cent move to the downside, and then it bounced as well. So it doesn't matter if they were longs or shorts today. The majority of these things were getting nice little pushes, 50 cents on a $37 stock, nothing to sneeze at there, a little over, I don't know, a little over 1% on an intraday move there. And then ARLP kicking out a little bit, you know, bottom of this candle, you got a little bottom tick here, and I think that one was, what, 15.50, so not a whole lot of juice in that one. But getting in the money about 30 cents there before it bounced as well. But hey, this one, I don't think anybody would have set the pain here, but finishing pretty much right along there. So not a whole lot to write home about on the shorts, but they are paying dividends as well. Today was just more of a long day for the Holly Priors. you know, I just saw Waleed's comment there. The interesting thing about what we're seeing here, we have to do this manually right now. But in the future versions of Holly, once we get paper trading delivered out to you guys, you'll be able to pick, hey, I'd like to track Holly priors for the past 1 day, 2 days, 3, 4, 5, 10 days, whatever floats your boat. It's just that right now, if we do want to do this, we have to do it manually using the process that I just showed you guys. So hopefully that makes sense. Because with development, you know, you never know when that's going to come out. Could be a month, could be a week, hopefully shorter time than longer time there. So any questions about following the prior Holly plays, go ahead and let me have them. And if not, we'll just cruise right along, because with my bread and butter windows, the range breaks today, man, they were hard to find. There just wasn't a whole lot of quality out there, but you know, there's always a few each and every day. I'd say the prettiest one that I did not get an alert on today because the volume didn't kick in until after this break had occurred. I mean, look at Philip Morris today. I mean, that was a beautiful release and continuation. I just got the alert late, and then I didn't want to chase it because the volume wasn't there before that break right there happened. But boy, a nice move down in PM nonetheless. Tobacco stocks getting beat up a little bit there. So let's talk about the few range breaks that I was able to identify today. As far as the no resistance versions of Turbo Up and Turbo Down and the no support versions, a lot of low cap stocks coming through there today. As you can see, lots of yellow stocks coming through there. I've typically tried to shy away from them. They're pretty spready, and if you don't get them right on the money, there was some fierce wiggles. We did get a little bit of green guys coming through the Turbo Up family no resistance today, but this was very late in the day after the crucial points had already been violated there. So not a whole lot coming through those windows today, which is why I've marked those with nils. So on the traditional Turbo Ups and Downs, you know, Lyft and Myrna, honorable mentions here. Now on this Lyft trade, these were closer to the open, so we have to kind of revert back to 5 minutes here. And these aren't going to be the prettiest things. You know, a lot of wiki action in Lyft here in the first 1, 2, 3, 4, 5, 6, about the first 30 minutes or so, but we did get an opening range break that would fit the mold there. Not quite 30 minutes, but about 25 minutes into the open. We did get some volume and a push. Let's see, where did my single stock window go here? Bear with me 1 second. Where are you? There we go. All right, so Lyft being one of the few stocks that was pumping along with some decent volume today, finished at 1.7. We get that range break. I mean, a little whiskery here, but it's putting them into the up and the downside, so we've got to take it when it comes. But as soon as we got this crack right here above that level with new highs, what do we have? Looks similar to what Holly would have done. So you probably would have went, you know what, reduce risk or profit save during this little area of consolidation. But let's see here. Entry candle here, 5, 10, prior 15 minutes. We have to use that wick as our stop loss if we wanted to play Lyft today. So about a 50-cent stop, which isn't too bad. A little 1% action there. But hey, a little sideways action before this thing finally spiked up and topped out at 51.49. So about a point, a little over, I don't know, I'd say about a 2% potential there with a 1% risk. Not too bad in Lyft. Where you got out, anybody knows here. But once again, you see what happened. No continuation. As soon as we peaked out up here, put this wick in, it was back all the way down to, you know, to break even. So that was one okay one. The only other one was Myrna, MRNA. This one more bull flaggy. A lot of steam leading up to this little consolidation area right here. 5, 10, 15, 20 minutes of rest, but puts in a nice tight little area right here. So as soon as that level right there was cracked, boom, the majority of the move happened right here. What I liked about Myrna is the risk was so small. You know, entry candle here, prior 15-minute low, about right there. So we did have a nice tiny risk area with a much larger reward area, which is what we like to see, multiples bigger than the risk area. Myrna staying strong all day. Finished the day almost at 3 on the relative volume scale, usually only kicking out about 1.5 million shares, but turned in almost 3.2 today. So the volume definitely working to our advantage in Myrna today with a nice low risk. Other than that, not any other pristine patterns. If we went scanning through this window right here, you just see they're all stretched out, the timing is off, but that was just the nature of the day. As far as to the downside ones go, you could really only find one, and it wasn't that pretty. VMW, you know, look at the range that we'd put in, nice and big. Got these wicks here. As soon as we get down, algos are taking them back up. The only thing that would have kept you in this one is the entry candle here and the 5, 10, 15-minute prior area, just slightly above the candle, the entry candle here. So stop area up here, had to sit a little bit of pain, but this seems to be the theme of the day. You know, you get into a position, slightly in the money, zip back up almost halfway through your stop loss for a good 5, 10, 15-minute period, then back down here, and finally gives another push and releases. Risk area not looking near as good as the mRNA trade. You can barely fit this guy, this little risk area in here one time with a little bit of change left over. So, you know, somewhere 134.22, 132, so not quite 2 points, and a pretty pricey stock there in VMW, but it's the pattern that we're focused on here, not necessarily the stock price. So when this is the prettiest downside play, man, that tells you something about the overall market and the ebbs and flows that we had today. The seesaw, or the inchworm pattern that we saw in the SPY, where, you know, if you were dialed in with the market flow, you had some good downside and some good upside potential. It just didn't sit still for long, up and down and up and down. All right, Bill, what is the screen that Lyft and Myrna came from? Well, that would be the turbo breaks up and the turbo breaks down. If I can get this one over here, that's where these guys came from today. Turbo breaks up with a minimum of a 4 billion market cap. Now, if you go to channel 4, which is over here at the bottom of the channel bar, if you would like to try turbo breaks up and down, or any of the windows that I'm showcasing today, along with any of Steve and Andy and Sean's favorite windows, they're all going to be in channel 4. But I will point this out. The original versions reside in channel 4, along with the no support and no resistance. Now, with the ones that you're seeing here, in an attempt to lessen the amount of alerts that I've had coming through here, I've put a little bit different spin on these. I'm using our custom next higher low filter here and using a minimum of 50 cents. And what that's doing for me is telling me, okay, before this upside play hits overhead resistance, or before the downside play hits possible support, there's at least 50 cents of room to that next support or resistance level. All right, that is one change. There's two changes here, and I've also tacked on relative volume of 1.2. Okay, so those are the differences between the stock windows for turbo up and down that you guys will find in channel 4 and the versions that you're seeing right here, because I just get less hits and the volume is still going to be there, and there's going to be a little bit of room, 50 cents or more. 50 cents is the minimum room to the downside and the upside. And you'll notice I'm showing those columns as well, so that when these plays come through, I can just look right here and go, hey, if I like what's going on with the risk on L, it's got 99 cents of upside room before it hits that next level of short-term resistance, and the exact opposite to the downside there. Yeah, Bill, if you want that formula, I'd be happy to insert it into your account. Just send the request email to info@trade-ideas.com. Notate the filter and the fact that you saw it in today's office hours webinar. I'll pop that into your account and you'll be good to go. All right, ladies and gentlemen, we are up against the top of the hour here. That just gets us right through with all I had to present with you guys today. So want to thank everybody for popping in here. Got a decent little crowd for summertime. And once again, I stand corrected. The 2nd, September 2nd, is Labor Day, so the market will be closed. So we won't see you guys for office hours till the 9th. So Scott, having said that, if you're ready to walk us on out of here, we're ready.
Yeah, sounds good. Okay, so a couple things on the way out. You're going to make sure you have our new ebooks. There's 3 books, 2 chapters each, organized by subject on either swing trading, active investing, range breaks, and pullbacks. Each book also includes some cloud links to populate some strategies in your trade ideas. So just go to trade-ideas.com/setup to get them, and you get the download links delivered to your email address. Don't miss out. We also have a podcast that we release most weeks. Go to just search for Trade Ideas Podcast in your favorite app to subscribe, and you'll be ready to get the next one as soon as we pick up from the summer. We got a code that's good for the rest of this month, which means it's not good for that much longer, so take advantage of it. It's Heatwave, all caps, saves 15% off your first month or year of any Trade Ideas subscription, Brokerage Plus, or upgrade from standard to premium. You can email us info@trade-ideas.com with all of your questions. That's the best email address that's the best way to contact us for any type of question or support is the info@trade-ideas.com email. It goes into our help desk software and it's routed to the appropriate team member. You can find Jamie on Twitter at QuantBot. We've also got at Today Trader is Steve Gomez, and at Trade Ideas, Facebook.com/TradeIdeasPro is the page to find on Facebook and like so that you can share the stuff we post with your friends. We're going to have the recording up later on tonight or tomorrow, so stay tuned for an email tomorrow with a link to the playlist. Thanks, everyone. Thanks, Jamie. Thanks, Steve. Thanks, all.
Hey, thank you, Scott. Thanks, everybody, for popping in, and we'll see you guys tomorrow.